The trading volume of Bitcoin and Ethereum in the spot ETFs has just hit a new record this past week, while at the same time, we're seeing that 94% of XRP investors are currently in profit. So we're now facing a moment of great FOMO in the crypto ecosystem, where everyone is buying, maybe too late, just before a bearish correction starts. Or, on the other hand, we might simply be only 40% into the rally. Let's take a look. Here we can see a tweet from Eric Balchunas, who was a senior ETF analyst at Bloomberg. He's sharing that in the last week, we've just experienced a new record in trading volume, surpassing $40 billion. And as Eric points out, this is clearly thanks to the Ethereum ETF, since in previous videos, we've already seen how it was breaking records in terms of purchases. Honestly, it's very striking how we're at a climactic point, a key point, and we're not just seeing it reflected in the price action of Bitcoin and Ethereum. That shouldn't surprise us, because it's enough to look at the way Bitcoin's price has behaved or the way Ethereum's price has behaved. But we're also seeing very interesting things elsewhere. If we look at the price of XRP, it doesn't look bad at all either. And that's exactly why when we check the blockchain data, we can see that the percentage of XRP investors in profit right now is sitting at 94%. That means pretty much everyone holding XRP in their portfolio is jumping for joy because they're in profit. But this data on its own, if we analyze it in isolation, could actually give us a less encouraging picture. Institutions know perfectly well what the exposure of retail investors looks like right now, and it's obvious they're heavily long. So how tempting would it be for institutions to shake out XRP investors with bearish moves, push them out, buy even more themselves, and then continue with the rally? Like I said, this is one way of reading the data if we look at it in isolation, but markets should never be seen in isolation. So why am I presenting this analysis in this way? If I'm telling you not to see it like that, the reason is simple, because it's very common, due to a lack of understanding of technical analysis, whether traditional or on-chain, that we see a lot of people saying that since such a high percentage of traders and investors are in profit right now, then just like in the past, whenever that happened, the price had to fall. And it didn't just happen once, it happened twice, which is why some would now be pointing out that we're in a dangerous moment. And as I was saying, if we take this data in isolation, then yes, of course it makes sense. But obviously, there are many nuances here. Just look at the shakeout that happened at this point, with that bearish push in the price and then the rebound afterwards. It's true that the price didn't climb to make new all-time highs, but why couldn't it have done so? It could have, easily. They just didn't decide to push it that way at that moment in time. Or take a look here, when XRP was already around this point. 100% of investors were in profit. And notice the whole climb, all that time that passed where investors could keep feeling optimistic about the price action and continue making returns. And here's something important. We're analyzing one case, two cases, just to speculate about a hypothetical third case. That's a statistically ridiculous sample size. That's why I want to show you this chart that's been circulating online, because I'm very sure misinformation is going to spread like wildfire. So let's make it clear. At Crypto Insight, we do not believe the price of XRP is going to fall just because 94% of XRP holders are currently in profit. Instead, let's move on and analyze the crypto charts, because I can sense that a lot of people are getting spooked by the week we've just lived through in the crypto ecosystem. Bitcoin dropped 7.6% in a very short time, and these drops are showing up across the whole ecosystem. For example, Ethereum fell by 11%, XRP also dropped, and really the entire crypto market took a hit. Now, these kinds of declines that we're seeing across different cryptocurrencies, though in some altcoins it's really not that dramatic, are making a lot of people nervous. And honestly, that's normal. But we have to remember we're living through a glorious stage for cryptocurrencies. We must never forget the bigger picture and the current context of crypto. Right now, you're looking at Bitcoin's chart just to remind yourself of where we really stand today. And yes, the price has dipped a bit. It scares a lot of people. But if we put things into perspective, let me ask you, what are we really talking about? I know everyone already understands that here at Crypto Insight, we've been bullish and positive on crypto for a long time now, but it doesn't hurt to repeat it. We remain optimistic about crypto in the medium to long term. And now I'm going to share with you the kinds of drops that could still happen in the crypto market, and why those drops wouldn't mean the end of the world. In fact, they would be very healthy, creating new opportunities to go long. In other words, I'll show you the price levels that if crypto were to fall to those zones, it wouldn't be a problem at all and we could still remain bullish. I'll share that with you in just a moment, but first...
Welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
Take a look at the Bitcoin chart on the 1-hour time frame. We're working after a strong bullish move that started much further down. Institutions could very well be shaping this larger bullish channel that might be developing. In other words, we're speculating about this channel. It's not a confirmed structure, not at all, but we want to anticipate the possible scenario in which this channel actually comes to exist. So what does that invite us to think? Well, regarding Bitcoin, this latest drop could simply mean that it wouldn't be a big deal if Bitcoin came back down to test the structure, or even created a false break. That's something we could tolerate and accept. In the crypto ecosystem, everyone would freak out because right now we're living through a climax in Bitcoin and Ethereum ETF inflows. At the same time, we're seeing that 94% of XRP holders are in profit. Could they be shaken out? Of course they could. At the very least, a portion of them could be flushed out before the real move continues. That's why I say there's still room for a pullback, and it wouldn't be a problem if it happens. In other words, we remain optimistic about Bitcoin. Now let's look at Ethereum. It's true that Ethereum's 11% drop hurts more percentage-wise than Bitcoin's. That's why we're analyzing how far that drop could extend, because it could stretch further. Still, we're looking at a structure that could very well bring the correction to an end. We can never know for sure, but if the market wants to, it could make another attack, deliver another scare. Even so, such a drop wouldn't mean the end of the world, and we could still continue toward new all-time highs in Ethereum. As you can see here at Crypto Insight, we remain optimistic about the crypto market. And if you're looking at XRP's price action, you already know how impressive that breakout was. This black swan move above a key structure, and of course to the upside. What we're analyzing now is that major institutions could be working a defense zone here to protect their bullish positions. So think about this. We're seeing a pullback, and why not consider the possibility of a failed replica, a trap, maybe even leaving a gap here from which the market could then continue its climb. As you can see, this video is really focused on communicating to you that we remain optimistic about the crypto market. Even though we're seeing these drops, and even if we were to see more drops, we'd still be just as optimistic. And the explanation with Solana is key here. There's a part of me that would actually love to see corrections in the crypto market, that we'd see more of these declines. Let me explain why. Solana is a great proxy that shows us a strong bearish impulse, and right now it's forming what looks like a corrective pattern still in progress. We've got the W, a weak Y, and what we'd really like to see is an attempt toward the trend line. It doesn't matter if it reaches it or fails, but we want to see that Z form in front of us. That's why I'd actually prefer to see short-term or mid-term declines in crypto. Of course, always knowing our long-term bullish outlook remains unchanged. And here you're looking at the chart of Chainlink. Notice how after its bullish accumulation phase, it already reached and even surpassed target 1. But also notice how it's now reacting to a defense zone. That's perfectly normal and understandable. What do I mean by this? That just because it's at a defense zone doesn't mean the price has to break through it immediately or easily. It can react first, and that reaction can take different forms. I'm simply pointing out why the price is reacting where it is, and look at this key level. This was a trap, so retail traders couldn't see where the real structure was. And this isn't just about Chainlink, it's about the entire crypto ecosystem. At the end of the day, the whole market is interconnected. So, in Chainlink, we can perfectly expect small depreciations or corrections. It's no big deal. The price can still keep climbing afterwards. And take a look here at SUI. We lost a structure, and losing it was already telling us we'd probably visit this defense zone. So maybe what SUI is really signaling is that it makes sense for us to continue falling a little further. And that's fine, because they might want to go back to the replica of that first bearish impulse down to the zone itself, or even create a false break at the defense zone before pushing the market upward in a fully confirmed way. That's why, as I said, these are moments to stay calm. We'll probably face some bearish volatility in the days and weeks ahead, but as you can see, it doesn't necessarily mean it's the end of the world.
I want to introduce you to our private Telegram channel, which is completely free. In fact, at the time of recording this video, we're also live streaming for the community. During these live sessions, we look for trading opportunities in the futures market. We focus on intraday trades, and within this community, members also share their operational ideas, what they're working on, and what they're looking for in the markets at any given moment. It's honestly very interesting. This community is constantly learning and improving. So if you're an active trader and tired of trading alone, you can join our community. It's very simple. The requirements are as follows. You need to be a user of BitUnix or BuyDFI, have deposited cryptocurrencies into your BitUnix or BuyDFI accounts with a minimum value of $100.00, and use this account as your primary futures trading account. account. In other words, you need to be actively trading. Once you've met these requirements, simply fill out the form displayed on the screen. It consists of just 5 simple questions, and we'll get back to you as soon as possible. I'm leaving you the BitUnix promo details and the Crypto Insight Premium Access form in the description and pinned comment of this video.
And now I'd really like to know your opinion about the crypto market. Do you think we'll get a tricky bearish volatility move before going higher? Do you think we'll just climb directly? Or do you believe the crypto market is going to collapse? Let me know your thoughts in the comments. And if you've enjoyed this advanced technical analysis, give the video a like, subscribe to the channel, and click the bell so YouTube notifies you of future uploads. Good luck with your investments, and see you next time.